Hey all, welcome to ShareTreck. This is Raj here. Today it's the 13th of December 2024, 7:16 a.m. in the morning, and I think I kind of give up on waiting for the bubble to burst. The market seems to be going higher and higher, as you can see right here in the index futures that we can see on CNBC homepage. Dow futures are up 0.17%, S&P futures are up 0.33%, and Nasdaq is up plus 0.69%. Now the multiples are really high, the expectations are really high, and the policies from the next administration, the monetary policy and its potential clash with the fiscal policy is one aspect that I'm concerned about. The other aspect I'm concerned about is the geopolitical situation with the tariff threats, and also the budget situation in the United States with the taxes coming to expire and the proposed $2 trillion tax cut and the tariffs. I think the markets can stay crazy for longer than you can imagine. So when the bust comes, it's going to be sudden. That's my opinion. I would like to hear from you guys about this. And having said that, let's jump into today's a quick review of what's happening with the market as we come to the end of this week and to the middle of December with just 2 more weeks left. Let's get started. Welcome back, friends. I want to start off with this article first. It says inflation still high, but so is the stock market. Now, this is a big contradiction in my opinion, because when the inflation gets higher, the Fed would raise the interest rates. And when the interest rates are raised, money rushes into the bond market and out of the stock market. Now, that has not happened in this case because inflation is still high and the stock market is high. Now, many people point out that there was a lot of cash sitting in the sidelines waiting, and it has entered the market, and that's why we are getting the second wind. That could be true. Probably all the measures taken during COVID to stimulate the economy and to put a floor under the economy probably is distorting our perception of what is happening. But one thing I'm sure about is that the high multiples that we have and the high expectations we have for future earnings is driving the stock market, and the reckoning is coming very soon. If you look at the US debt levels and the interest payments that will be needed to service the debt, I think it paints a pretty scary picture. And the US dollar, being a reserve currency, is able to handle all this strain. If it was some other country which doesn't have a reserve currency status, and if it had the metrics that US has got in terms of debt to GDP and interest cost, I think that country would have gone under by now. So having said that, what do I plan to do? That's what I'm looking at again today, trying to revalidate my approach. My approach has been to take profits and have cash on the sidelines. I started off with 50% cash, and now I'm almost at 60% cash. And the stocks that I have on my portfolio are stocks like Walmart, Costco. I still have got some Exxon, and I have got Berkshire Hathaway, and I've got Google, and I've got Amazon. These are the stocks which are still in my portfolio. And today I'm looking at the Tradingview platform, looking at Nasdaq futures. There's a healthy gain of 0.73%. And friends, we are hugging this diagonal line of resistance, and we are showing no signs of coming down at all. There is no reverting towards the mean. And I have my buy and sell indicator out here. The red line and the blue line are diverting as far away as possible. So that brings me to only one conclusion, that when the red line meets the blue line, it's going to be a severe dip where the blue line is going to sharply drop down. The red line will also go down, and they'll meet somewhere below. And that's going to be scary. That's my worst fear. I would like to hear from you guys whether you think I'm overreacting to this or I'm seeing this all wrong. Next, I want to go and have a look at our indicators and look at QQQ and see where QQQ is. So here we are with QQQ. I'm going to draw a diagonal line of resistance and connect the higher highs. and mark that as red. So this is where we are. Yesterday we had a little bit of giving off. We dropped 0.65%, and today we are up 0.82%. So we are again going to be testing this diagonal line of resistance for QQQ. The MACD was moving towards the signal line yesterday. Today it's going to move away from the signal line, and we are going to approach our resistance at 79.12 on the RSI chart, and we still have room out there. So I think for all intents and purposes, today is going to be another green day where we test. But I don't know if somewhere towards the end of the day we decide to come down. There'll be option expiries and things like that happening because we are here on a Friday. So let's see how it goes. Now, I want to look at some of the key stocks. I'm going to start with Genomics today. So I want to start today by looking at the monthly candles. So each of these candles is a monthly candle, and I'm looking at Verve. I just want to quickly go through our watch list, and the point I'm trying to make here is that people who have invested in Genomics have had a lot of pain that they have gone through for the last 2 or 3 years. Every genomic company starts off with a high valuation and high pricing, and then it slowly starts to fall down, and most have lost a lot of value. Look at Verve, it has dropped significantly. Same story with Ginkgo Bioworks, same with Caribou Biosciences. I could go on and on. Let me go to ARC-G, which is kind of representative of everything that we have here in Genomics. So you can see ARC-G has dropped significantly, and there is a floor out here for ARC-G at 22.94, and that floor has held very well for us, and it has been tested many times this year, and we are hovering above that right now. And our story for biotech is told just in this chart itself. So things have been pretty bad. Now I want to take you into the heat map to give you an idea of how bad they have been. Now S&P 500 is what I'm looking at out here in this heat map, and in S&P 500 you can see that healthcare is a place where you see a lot of reds, and especially in healthcare you got healthcare plans, which is predominantly red, which has companies like CVS in it and United Health. And in pharmaceutical companies, drug manufacturing companies, you got a bunch of big names which are deep red at the end of 1 year. This heat map is for the entire year of 2024 so far. And Johnson & Johnson is down, Merck is down, and we have Pfizer, which is down significantly. And I have Pfizer in my portfolio. I have not sold it because it's in a loss. It doesn't make sense selling it right now. So this is one pocket of weakness that we see out here, which extends into drug manufacturers as well. And the other area where we have a bit of weakness, where I sense a lot of opportunity, is consumer defensive. So in consumer defensive, where I've already positioned myself, we have Walmart leading along with Costco. They have done extremely well. I had P&G for a short period of time, but I don't have it anymore. That also did reasonably well. But we have beverages area where Pepsi and Monster beverages, these are all still lagging on an annual basis. And we have consumer defensive confectioners, which are lagging. So there is a little bit of opportunity out here in consumer defensive to preserve value, because there are beaten down stocks out here. And if you were to look at real estate, that's another area where there is a little bit of opportunity. And energy also shows some pockets where good names like ConocoPhillips are down. I think even Shell is down, if I'm not mistaken. I can't find it out here, but Shell is down and Schlumberger is down. So there are some opportunities here along with basic materials. But in general, everyone has done great. There has been great returns. Even semiconductors also has done well. AMD was a little unfortunate, but Intel takes the cake there. Intel is down 52% for the whole year. So overall, the picture is everybody has made a lot of money. And if you were to go to today's performance, as of yesterday, everything was a sea of red, and we saw some money moving into the beverages area, Pepsi and all, which were beaten down. So whenever the market dips a little bit, money goes into these consumer defensive areas. So that's the point that I wanted to make. Coming back into our Tradingview platform, in our technology side, I think that Google can still go up further. It has already met our cup and handle target. These are all 1 month candles, just to remind you. And our MACD is looking pretty good. And momentum is also picking up. Pre-market, it's down 0.54%, but I think it still has opportunity to go up. Tesla is looking as strong as ever. And I don't know, the technicals definitely point that there is still more room for Tesla to go up. There would be some options walls. I don't have visibility into those things because I don't understand them. But from a technical perspective, this chart shows that Tesla is still strong. Pre-market, it's up another 1.21%. Apple also got some more room to go up, and pre-market, it's up 0.25. Meta has got a resistance out here on the RSI chart, so definitely it's going to go down. It's down 0.60 in pre-market. I'm expecting it to consolidate or come down and test this diagonal line of support, which it has got from the previous sessions. Now, if I was to go into Amazon, I think Amazon still has got room to go up. It's down 0.18%, but the chart is still strong overall on a monthly basis. And Microsoft is looking pretty good overall, and it still has room to go up, but it's down 0.15%. So the point I'm trying to make, my friends, is that the valuations are stretched. The technicals, if I look at it from a 1 month perspective, zoomed out perspective, still seem to show that there is more juice in the market. I'm not going to get tempted. I'm going to sit on the sidelines because I think when this bursts, it's going to be really nasty. And I think I'll wait it out. I would like to hear from you guys what you think is going to happen. Before I wind up, I would just like to show you the stocks that I have still got in my portfolio and how they are performing. So first I would like to show you the Exxon chart. The stock has fallen. It fell 0.09% yesterday, and this morning it's up 0.24%. So overall, I'm still thinking that energy is going to do well, and I'm holding on a little bit with Exxon, but I've sold half my holdings so far, but I still have a little bit here. Next, I'm looking at Walmart, which has done pretty well for me, and it's up 0.05%. The failed merger with Kroger, I think there was a merger talk going on between Kroger Albertson, and if that merger had taken place, it would have become a bigger competitor for Walmart. But since that didn't go through, I think that's going to be a little bit positive for Walmart. And again, we have Costco, which is the other holdings that I have. It created a bull flag out here, and then it moved upwards. I'm thinking there's going to be another consolidation and then a move forward, because right now the MACD is ready to go bearish because we went to the overbought condition and we are just cooling off a little bit. Today the stock is up 0.28% in pre-market trade. So we have spoken about Exxon, we have spoken about Walmart, we have spoken about Costco, and then I have Berkshire, the other holding, which has been dropping, but it's still heavily positive in my portfolio. I'm holding it for the longer period because they got huge amount of cash on their balance sheet, and I'm pretty sure they'll make a very good acquisition at the right time. Right now, I might consider dollar cost averaging as we approach closer to the oversold area. Looking forward to that. And we have, after that, I think we have my worst performers. My worst performers happen to be Nike, where I'm doing really bad. I'm double-digit negative out here. I'm still holding on to it. And the other bad holding I have is PayPal. I've been holding it for a very long time, and it's on a recovery path. So I'm just staying along with it. I don't want to realize my losses out there. So that kind of rounds up what I have with me right now. And I look forward to these laggard stocks coming up, and also the stocks like Walmart and Costco help me play defense. And when the prices drop, I would be dollar cost averaging. So to summarize, I'm still on more of cash, and I might liquidate a little bit. Yesterday, I bought a little bit of FNGD as I promised, based on the signals given by my new indicator. And unlike what happened day before, where I made some money out of the trade on FNGU, I'm at a loss right now, and I'm hoping that I could recoup that, or else I'll consider it a dollar cost averaging effort. So I'm not doing any more trades today. I'm just going to sit and watch. I would like to hear from you guys if I'm overreacting and whether you think the bull market has just started. We are coming to the end of the year. There should be some profit taking. There should be some loss booking for tax purposes. I don't see that happening here based on the way the prices are going up. I want to hear from you guys. What is your theory? Please put it in the comment section. I always read all your comments and respond to most of them. So with that, my friends, I'd like to say bye for now, and I'll catch up with you in the next video. See you later.